I wanted to do a video about trading psychology. We had this lesson in our Discord, and it was highly requested that I would do a video so people can watch it later. Let's go over this. My name is Elena. I've been doing part-time trading for over 7 years now. Just recently started social media and the Discord, and I'm really happy to share my journey with everybody. This lesson is going to be lesson 1. So trading psychology lessons will be divided in 4 sections. So this is section 1. Let's go over it. So what is trading psychology? Why do we need it? Why is it so important? Why does it matter? Because the market doesn't care how smart you are. It rewards discipline and punishes emotional decisions. So it's a very powerful words, and I'm sure a lot of us can relate to that. So what it contains of these emotions, what emotions we contain when we trade. We have fear, we have greed, we have FOMO, impatience, lack of discipline. It's all trainable, easier said than done. So we just went over what emotion costs you the most money. Fear, I could relate. Greed, I could relate. FOMO, fear of missing out, I could relate. Impatience, I could relate. I believe if you are disciplined in your life, with your workouts, with your eating, with your even laundry schedule, I think it will reflect in your trading. This is the most beautiful slide, in my opinion. I think this is so beautiful. First of all, I love blue. But let's go over what do we see here. The trading iceberg. Success in trading is about what you can't see. So what people focus the most is indicators, chart patterns, support, resistance, risk management. When I do my live trading, one question I get asked over and over again, what are my indicators? And my answer really is, it doesn't really matter. Can the indicators work? Yes. Can the chart patterns work? Can support resistance work? Everything can work, but the markets are consistently changing. And I know people try to write like bots that it trades when see certain patterns and all that. It's not as easy as a mathematical equation in a way, because what is market? Market is made of people. And what is below the big iceberg is a discipline, patience, fear control, greed control, avoiding FOMO, and consistency. What I like about this chart is this is all positive things that we talked in the previous slides that were negative, right? Everything it is possible to turn into positive. We can learn discipline. We can learn patience. We can learn all these and turn into a positive. And this is how our iceberg will be a positive thing. So why most traders fail? Number one reasons for traders to lose money is emotional decision. When we make emotional decision, it's usually we'll go back like I sold it too soon. Oh, I exited and I took a loss and then it went my way. We made the emotional decision, and it's not easy not to make emotional decision when money's involved. So, but what that costs when we make the emotional decision? You exit winners too early. I'm really guilty of that. Hold losers too long. Very guilty of that. Fear of missing out, chasing, and overtrading. I overcame this. It took me a while to overcome this. Revenge trades. I believe all of us are guilty of that. Right? It's depending what you're trading. Some days you'll be like, okay, I lost 250. I could make it up. I'm going to enter again. And then, we keep digging our hole. The market is 100% emotional. Your job is to stay 100% disciplined. This is very powerful words too. Right? So we're not robots. We're humans. But market is made of people. And we have to be strong. So this is example. You buy over here for $50. You see it goes to 52, but it pulls back to 51. It's like, oh, I'll be okay. I'm taking that. And then it goes to your target. It is hard to stay in a plus. I believe it's harder sometimes to stay in a plus than it is in a minus. But what I learned is to put my targets a little bit lower than I originally calculated. And when I'm happy, let's say I'm happy at 52, I'll be able to trail my stop. So I try to put myself in like happy situation. I'm happy if it sells me in the plus. I'm happy reaches my goal. So that's what I've been tailoring my technique to avoid the fear. So I could sleep well. Like I know my stop loss is protecting my gains. How fear shows up in trading, selling when it's too early. We talked about it, hesitating on quality setups because we've been burned so many times, right? Taking profits before targets. That's a hard one. Like I said, not always reaches. Sometimes they almost reach. Like what I talked about it, I actually start making my targets a little bit smaller because I noticed it almost reaches my goal. They were actually a stock that it did not reach my target by 1 penny. I'm not joking. 1 penny. And it went way against me. So there's a way to tailor it. Avoiding trades. Avoiding trades, that comes with time. I don't think experienced traders are avoiding trades. They just better in sitting in the pain longer. So this is kind of repeat about fear is one of the biggest reasons traders lose. There's many ways to lose, right? Lose we didn't take a trade, lose we sold too soon. There's a way to get out of the trade. You can always dollar cost average DCA if you want to, but lesson is fear convinces traders they are protecting profits. I could raise my hand, definitely very, very guilty of that, but I do have a plan. So if it reaches 50% of my goal, I'm happy. This is a real fair examples, which we kind of talked about is you buy a stock at 50, you sell at 51, and it goes to target. I obviously already learned that if I buy at 50, I add more at 51, and then I trim my stop. Fear is not an enemy. Losing trades are not the enemy. Breaking your plan is an enemy. Consistency comes from following your process. Feeling fear is normal. Letting fear control your decision is expensive. Isn't that the truth? Isn't that the truth? This slide actually stroked a lot of nerve for everybody in Discord. I was going over pretty quick because I feel like I kind of overcame this greed because remember how I said you tailor it. You don't try to get your targets too high. And that helped me with my greed. But I had to go back to this slide a couple times during our Discord call because I guess it struck a lot of nerve to a lot of people. So greed, what is greed? Greed makes traders want more and more and more. I think because it feeds that part of the brain that it gives us rewards. You're like, I was correct in this trade. My levels were correct. I could do it again. Let me show you. So because it gives us that happy dopamine or whatever side of the brain it feeds that you were correct. So that's when the greed comes in. And I deserve more, last time let's go back. There you go. This time will be different. I'll double up to make it back. So that's a together with fear. Everyone's making money. So this one is a big one. When people say, like, when you go on social media, you will see, I just saw people make $50,000 for the trade, $70,000 for the trade, and so on. I read that someone got 500,000 payouts from prop firms, and those are real examples. So when I look at them, I'm like, oh, look at me, I made 10% in the market. I was like, wait, I'm not good enough. So again, puts me down what I want to feed my brain that, look, I'm actually worthy of being here. I could make it. Look at me. So this is a big slide. It's a big one. So how to overcome greed? Can you? Let's see. Follow your plan. Respect your stops. Focus on process. Think long term. And control your mind. Thinking long term, it is the biggest that I had to learn. By talking to a lot of successful people, a lot of older people, when we had a liberation day, I talked to them. They're like, look, long term, you'll be okay. Long term, you will be more than okay. You will come out of your negative trades, see it as opportunity. So people see long term, you're like, if a market pulls back, great. I'm going to go and buy more at a discount. If market goes up, like, great, I'm going to sell it or buy some properties. So if you're thinking long term, not just right now that you're in the pain or you're in the minus, you will come out okay. So this one shows like some great examples. This actually happened to me when we talked about the penny situation where I bought it here. I enter one more time here and it goes my way and my target did not reach to 1 penny and it goes way below from what I enter. Right? So, and that down is so quick, right? Because we take elevator down and stairs up. I didn't know what to do. I did not know what to do and I just hold on to it. Had to wait a long time to go back to what I wanted to go back. And of course, it blew more than what I expected it to do. And the one way to do this, I learned, is to trail my stops. If I trail my stops, the same happy situation, I am better at it. And again, over time, we tailor our trading. We see what we can do better next time. So lesson greed turns winning trades into losing trades. Take the profit will always be another opportunity. But we don't want to contribute where you exit too soon. So that's why I think like trailing your stops could be a good answer to this solution. Fear of missing out. We all have felt that. We chase the move. So let's say move lures it in. It's like go. I'm going to go a little bit more long. And then it goes against us. Same thing. You keep going down. You're like, okay, I could go one more short. And it reverses. Because we keep seeing people like, look at me, I made X amount of dollars. Or you overpay for your entries. Your entries are not good anymore. And the truth is there will always be another trade. Your job is to wait for your trade. And it's the hardest job as a trader to wait for another trade. Waiting is harder than trading. Can you guys agree to that? You see stock running and you feel the urge to buy. We just talked about it, right? You feel left out. You keep hearing, oh, this stock went to there or to this price and this price, and you want to enter again. So the FOMO, I think it's more on hope. It's based on hope. You're like, well, everybody's talking about MU, and right now it's $900. I should enter because everybody's talking, all the articles, all the things I see online, right? But so we hoping is going to continue going. Yeah, that's the MU example for you, right? So you see the $55, you see it breaks, you buy it at 58 and it goes down, and you can panic sell it here and eventually rallies again. Everybody, can say, look at me, I made X amount of dollars when they enter here. It's easier to talk. But when you try to enter the game or catch the bigger move, we as traders have an edge, one to enter better. And we have to trust our technical analysis. You're like, okay, I don't need to get it here 58. Let me wait. It's going to pull back because markets don't move in one direction. To panic sell, FOMO makes you buy high and sell low. Patience helps you wait for the right setup. A bad entry is a loss. It could be a loss. It could be just your money stuck there longer. Like let's say you enter right here. Now you have to wait a long time for it to come back. Where instead of waiting here, you could have had a better setup on another stock and making that money work for you and come back when this one is ready. That's why I set up alerts. I don't sit there all day long and watch it everything. Turn around. So let's make it positive. Anybody that knows me, I love positive. We talked about it, right? So we're waiting for the retest, which means patience, and then we go in. And during this time that we wait, doesn't mean you have to sit on the sidelines. You could actually find another setup that your money is working for you. Patience pays. I've been saying that a lot. Patience pays. Patience definitely pay. When you wait for your setup, you enter with a plan, manage the trade, being patient, and take the profit. Not like me, don't miss out on 1 penny. Impatience destroys the profits. True, that's opposite of where we talked about being patient. And remember, small pullbacks are not reversals. Trust your setup and your plan. Give your trades room to breathe. Let the winners run. I could agree. This is a very true statement, but we also can agree it is easier said than done. That's why I think when we're in a plus and running our stops in the plus, trailing, I think is the safest way for me actually to trade. So there we go. A final takeaway on this lesson 1. We'll have 3 more to go. So what is this lesson 1? To have a plan. I think you have to have a plan everywhere. So if you want to lose weight, you're not just going to jump in and start yourself and start running and doing all that. You have to have a plan, right? You have to have a plan for losing weight. You have to have a plan for preparing your meals. So if it's a trade, what is your plan? Is it a long-term account? Is it to make daily income? Is it replace your job? What is your plan in a big picture? What do you want from this? What do you want? What is your goal? Manage your emotions, and the way to manage your emotions is to have things outside of trading. If it's a walk with your dog, if it's playing a game, even a board game with your kids, Is it watching a movie with your family? Is it I like baking? I like baking even with my kids, right? It helps me to come refreshed and I have my emotions better set because my cup is full. I'm not trying to get my cup full just from trading. Stay consistent. I will share my results pretty soon, how much percentage-wise I grew my account in 2 years. You have to wait for that video. Protect your capitals. We talked about it. Trailing stops is my favorite. Is it the right thing to do? For you, I don't know. But for me, that's my favorite. Let the runners run. It's hard, but kind of ties in together in this one. Discipline today, freedom tomorrow. Let me know if you have any questions, and I hope you guys enjoyed it. I'll see you in the next lesson.